For June, there was a mixed bag. So the large cap companies were positive for the month, small cap companies were negative. Australian markets, if we look at the 6-month period, which is probably a worthwhile reflection point at this point in time, Australian markets are up around sort of 4 to 5%, depending on which index you're looking at. It's lagged generally other markets around the world. So if you look at broad world equity indexes, they're anywhere from 10 to 15% higher. And then if you look at the US market, that's up around 18% in Australian dollar terms for the first 6 months of the year. The Australian experience over this last year and the last couple of years has been quite different to overseas markets. So the Australian markets lagged returns from overseas, down to the constituents of the markets. Here it's largely banks, the big 4 banks, and resources. Resources have been negative performers over the year, and the banks have been relatively strong, but still lagging other markets and other markets that have been performing quite well, and sectors of the market. So if you look at the US, where IT has been a large component of returns, it's certainly had a lot of headlines with the AI trends and other growth in those parts of the market. That makes up about 1/3 of the market in the US. It makes up less than 4 or 5% of the market here. So that demonstrates if there's 1 or 2 sectors that are performing really well, and you've got a bit of a concentrated market, that there can determine how you may have a return difference or a better return in different parts of the world or different parts of markets. Fixed interest markets finished around a similar point to where they started in the month. Again, if we look at a 6-month view, fixed interest markets have been quite volatile. And that's on the expectation that interest rates were assumed to be lower or going to be cut through the year, which actually, as we know, hasn't happened. And most interest rate expectations, certainly in Australia and in the US, are that we're not likely to see interest rate cuts probably for another couple of months, maybe in September for the US, and maybe not even until next year for Australia. As I've mentioned, we're halfway through the year. I thought it'd be worthwhile having just a quick synopsis of what happened and how difficult it is to predict what's going to happen in markets. The expectation at the start of the year was from the US and other major economies that we would have had 6 interest rate cuts through this year, and that's on the back of a slowing economic expectation as economies had the ability to digest interest rate cuts, interest rate rises that happened through 2022 and 2023. As we know, we're now in a situation where rates really haven't been cut in the US, and actually here they're being talked about being increased given the inflation data that we've seen to date. So that's different to what expectations were. In the month ahead, we'll continue to watch inflation data. There'll be further inflation prints, and then we'll see central bank commentary that we'll be watching. And I think that's core to clearly investment decision making over the next few months. We could see some volatility hitting into markets as well as we go through company reporting period, which is coming in July and August for the US and Australia. So that'll be watched with interest, and be interesting to see how companies have performed through the financial year 24 and what their outlook statements are to give some indications as to how the consumer's performing. As we know, consumer confidence is very, very low at the moment, the lowest it's been for many, many years. And that's even in the face of COVID and the GFC that we saw 15 or so years ago. As we get partway through the year, it's interesting to reflect on where things are at and how markets have been performing, but also how difficult it is to predict what the outcomes will be and what the future holds. There's a lot of uncertainty that hits markets, and that's one of the worst concerns that markets have is uncertainty, and that leads to volatility, which is a risk. The way to protect yourself against some of that risk is to ensure you've got diversification within your portfolio. So a range of different equity positions, a range of different fixed interest positions, and all of those hopefully do somewhat different things in your portfolios at different points in time.